Okay, and welcome back. Students who are taking financial accounting, and we are working on the Chapter 4 short exercises. And if you watched the previous video, I explained that if you don't understand the theory, um, if you don't get the problem, then you watch the video, and generally if it's an application issue that you have, you'll pick that up from the video. But if it's not the application part, then it's a theory, and you need to go back and watch the theory videos. And if you still don't understand something, telephone and speak with an instructor. But let's pick up with the next problem here. It says inventory purchases and returns. All right, Regal Spas purchased $17,400 worth of inventory from Pool Palace on account. The terms are 110, net 30. Some of the goods are damaged in shipment. So Regal Spa returns $1,600. That's return on allowance. Okay, that's what a return is of the merchandise to Pool Palace. How much must Regal Spas pay the Pool Palace after the discount period and within the discount period? So we're not concerning ourselves with journal entries here. We're only concerning ourselves with how much is being paid after the discount period or within a discount period. So after the discount period, we purchased $17,400, okay, with terms of 2% 10 net 30. But then there was a return of $1,600. So we have to take out the $1,600. So for A, the difference between the two is $15,800. So after the discount period, we're talking about $15,800. But within the discount period, originally purchased the 17.4, but we have 1%. Okay, so 1%. 1%. Let me back up here because I can't take the 1% yet. I have to take out the $1,600 that's being returned. All right, so now I'm at 15,800. All right, and I can do this either one of two ways. I can take and multiply the 15,800 by 1% and get whatever that amount is, or $158. Okay, let me clean that up here. I can either take the 15,800 and multiply that by 1%, which would give me $158, and then I could take the 15,800 and subtract the $158 to get the final amount of, let's see, 15,642. Okay, notice that I did two steps. In step number one, I took the 1%, and then in step number two, I subtracted the discount amount. Or what I could have done was I could have just taken the 15,800, and since it's 1%, if I multiply by 1%, I'm finding the discount amount here. Okay, the terms discount. But the question is asking me how much I'm paying within the discount period, so the total I'm paying. Well, if I have 100% and I have here 1% of a discount, right? The remainder that I have to pay is 99%. So I could actually just take the 15,800 and multiply that by 99%, and I come out with the same exact thing, $15,642, right? So basically, mentally, I went and said, sure, I'm doing two steps, okay? One, I'm taking 100% minus 1% to get 99%, and then two, multiplying it by 99%. But notice that doing number one here, mentally it's a lot easier. Whereas coming over here and multiplying by 1% and then subtracting the discount amount, actually I'm kind of like physically I have to do two different steps. Whereas over here, physically, I'm only doing one step if mentally I take the 1% away. Okay, both ways will come up with the same answer. It's just a matter of, how you prefer to do it. To be honest with you, I have, even though, I can do it this way, if you get into the habit, you'll end up mostly always doing it this way. Okay. Um, it's just a personal preference. Okay. No right or wrong to either way. All right. 4-5. It says here, journalizing inventory purchases and returns. Okay, so Regal Spas purchased $11,800 worth of inventory from Pool Palace on account again, right? On account, 11,800. Terms 2% 10, net 30. Some of the goods are damaged in shipment, so Regal Spas returns 2,300 of the merchandise in Pool Palace. Basically the same exact scenario up here, except different amounts, right? Right. So now what we have to do is we're going to actually make journal entries. So we're going to have to do basically the same kind of math, but now we're going to have to make, apply the journal entries to it. So journalize the following transactions. Explanations are not required. So A, the purchase of the goods, right? So I'm going to purchase 11,800 on account, right? So that's, and I don't have to worry about a date here. So let's see here. Okay. So I'm going to purchase that on account. So am I affecting cash? No. And if I'm not affecting cash, then am I affecting accounts receivable or accounts payable? Yes. I'm buying it on account. So accounts payable is a liability, and I increase my liabilities on the credit side. So I credit accounts payable for 11,800, and I'm going to debit what? I'm going to debit inventory because that's what I'm buying for 11,800. So that's that. Okay, now return of the damaged goods. So we're returning $2,300 worth, right? Well, if I'm returning $2,300, in the theory videos, I think it was the second one for chapter 4, I kind of went over, the credit memos. When you have a return, it's basically a credit memo, and what I had said was you have to do a little bit of the math when you're doing partials, okay? But basically all you're doing is just reversing your journal entries, okay? So you have to take a look at your journal entries and figure everything out. And I also said that each situation is specific. It's an individual situation. Sure, you understand the concepts and apply it to the situation, but I didn't give you specifics because every situation is different. If I gave you a specific in that theory video, now I have a different situation, and even though the concepts apply, you can't go back and mimic it exactly because it was a different situation. All right, so where we're at in that right now, the whole idea is when you have a return, that's a credit memo, and all you're doing is you're reversing your entry. So if I have, I'm returning 2,300. So if I have a debit to inventory, that means, and a credit to accounts payable, that means I'm going to debit my accounts payable for 2,300, and I credit my inventory for 2,300. Okay, it's just that simple in this situation. If the original transaction or transactions were more complicated, I have to go back and reverse engineer, to figure out what amounts. Right. C, payment for the goods within the discount period. Okay. So I'm going to pay for the goods, and it's within the discount period. So what do I have here? Well, I had 11,800 was my original purchase, and I returned 2,300. Okay, so now I'm at $9,500 is what my accounts payable account, my inventory and my accounts payable accounts are at. That's how much I actually ended up purchasing, and it says I'm paying it within the discount period. So, in the like for problem, for problem 4-4, like the previous problem, I could do it two ways. I can actually take the 2% of this to find out the discount amount, all right, which is $190, okay, and then take the $190 from the 9,500, oops, less 190 in order to get $9,310, right? Or I could have just taken the 9,500, and since it's 2%, since I'm paying the full amount, well, 100 minus 2% is 98%, so I could have just multiplied by 98% and come up with a 9310 also. Either way's fine, the way you do it. You can either do it, this way, or you can do it this way. Right? But the bottom line ends up being is now you have to make the journal entry. Well, if my accounts payable, let's look at a T account for my accounts payable. My accounts payable had a credit for 11,800, and then I ended up having a debit of 2,300, which means now I have to actually debit accounts payable for 9,500 because I'm paying it off, right? If I have 9,500, that makes that 11,800, and this is 11,800. So my net effect is 0, right? So I debit my 9,500 to accounts payable, and then I have to credit something else. Well, what am I paying? I'm paying cash, right? Because I'm paying off the accounts payable, and I'm paying it for the amount after the discount, which is 9310. Oops, let me write it in the right spot. 9310. And of course, debits have to equal credits, so I have to credit something else, and that other thing has to be my inventory account for the amount of $190, right? Because if I'm looking at a T account for my inventory, right, I originally started with a debit of 11,800, and then I had a return of 2,300, okay, and now I have to take into consideration this discount of a credit of 190, okay, which makes my inventory $9,500 on the debit side. Okay, so, and to further that along a little bit more, now I have my cash, and I just credited my cash for 9,500. So the net effect here is that my accounts payable washed out, right? And I have the debit for 9,500 and a credit for 9,500 after all is said and done. I'm sorry, not 9,500. Let me back up here. This is 9310, and this ends up being 9, oops, and this ends up being 9310. Sorry about that. 9310. All right. So I have my debit to inventory for 9310 and a credit to cash for 9310, just as if I had purchased it using cash after taking a discount. All right. So that's what these the net effect of these journal entries ends up being. All right, so I'm going to stop here and pick up in the next video with 4-6.